So fintech stocks, financial technology stocks, have seen a pretty rough back half of 2021 so far. And if you've been following my channel for a while, you know that while, I like these fintech stocks, I did believe that quite a few of them were just way too overvalued, and now we're finally seeing those valuations get pulled back. But with the broader market also kind of starting to pull back, it's pulling the good companies and the bad companies all the way down. This means for individual stock pickers like us, there are opportunities out there to find these businesses that are just a class above the rest and pick those for our investments. So my goal with this video, guys, is to talk about 4 large fintech companies: Visa, MasterCard, PayPal, and Square. I'm going to compare all these 4 side by side. We're going to look at a ton of their metrics, things like free cash flow, things like price to sales, price to earnings ratios. We're going to look at a lot of things, margins, all that kind of stuff in this video. And we're going to try to determine which of these 4 makes the most sense at today's prices for an investment from us. Now, I'm going to share with you guys the stock that I personally own because I do own one of these 4, but that doesn't mean that that's the best investment for you. I'm going to present you with the data and you guys can go make your own decision based on that. Let me know in the comments down below after this video if you did find it useful. But as always, guys, smash the like button, hit the subscribe if you're brand new here, hit that bell notification so you're notified when I release new videos, and let's jump into it. So over the last 2 years, since the March 2020 lows, these fintech stocks have been on absolute fire, some more than others. Visa here from the lows is up around 70% when it hit its highs. MasterCard did a little bit better here, returning 86% in the same time period when it hit its highs. PayPal, and if you're invested in this, all you feel recently is just pain and selling, was up 230% at its highs. And then the big one here, Square, an absolute monster, is up over 600% when it hit its highs from the March 2020 lows. Congratulations to anyone holding these stocks, especially Square. I was actually one that held Square and I sold off for a small profit in mid 2020. And let's just say I missed out on quite a few gains here with this stock. But, we live and we learn these lessons over time. But the point here I'm trying to make is that while these stocks have seen some selling pressure in recent weeks, which we'll take a look at in a second, they are all still up massively from where they were at, in March 2020, about a year and a half, 2 years ago. So investors that bought in around that time period are still well in the green. So I think this is a good time to take a look at the discounts these stocks are offering, and then we can look at their fundamentals, the metrics, compare them side by side to see which of these deserves our money. Now, Visa here is down a healthy 20%, and this is in line with what the stock usually sees as a correction every few years or so. MasterCard slightly better here, down around 19% from its highs earlier this year. Square has recently seen some weakness. It actually picked up earlier this week, and it's down 25% currently on some accelerated selling the last 2 days or so. And then we have PayPal, the absolute fintech darling stock that is now one of the dumpster diver fintech stocks for a lot of people, is down near 40% off of its highs in some aggressive selling seen over the last few weeks. But we cannot judge these companies based on their stock price. That is the number one mistake to make when making an investment decision. You don't want to look at a stock price and say, oh, that's a good buy or that's a sell or whatever. You want to look at the underlying business because that's how you find value and that's how you find opportunity. So to better articulate this, to better present this data to you guys, what I thought I'd do is put together, a table comparing these 4 companies and looking at some key metrics that I personally look at that helps me decide which of these 4 deserve more of my time, more research, and eventually my investment dollars. So I figured the best way to start, look at their market cap, look at their revenue, and look at their revenue growth rate, because that's kind of the basic understanding that I think all of us have here for our investments in general. So here we can see among the bunch, Visa is by far the largest, well over a $400 billion company, and Square here is on the other spectrum, sits at around $100 billion. So, between these companies, we have a big divergence with MasterCard and PayPal falling somewhere in between. Now, in terms of forward revenue estimates, Visa is at the top here, but surprisingly, PayPal is actually expected to pull in over $30 billion next year, which is ahead of MasterCard. That was a surprising detail that I did not pick up on earlier. Now, 4 of these companies are all expected to pull in sizable revenue, but if we look at the growth rate year over year, it tells us another story. Visa, decent growth, mid-teens, that's kind of what they're guiding for. MasterCard, PayPal, they're coming in much stronger, closer to 20% growth. And Square, the absolute best performer over this last year and a half, is expected to only see single-digit growth next year. So again, surprising takeaway for me was low growth expected from Square. I did not expect growth to slow down this much year over year. But, on the plus side, the other 3 are still seeing some pretty good year over year growth despite all the headwinds that they faced. So this is just the first part of the story, understanding where these businesses sit in terms of their market cap, their size, and their future. Because while we can say that, 10 years from now, some of these companies may not be as relevant as they are today, that's possible. The best indication we have is just looking, a couple years out, because things change so fast in this world that we can't really look 10 years out and make a strong investment decision based on that. We have to look at the metrics today, look at what the metrics are in the near future, and make our decision based on that, and decide, hey, do we want to hold this company for the long term based on these metrics? The reason I say that is because a lot of you guys feel that, traditional Visa, MasterCard, even PayPal are boring companies, but the reality is they're strong businesses, they're huge businesses, they're still growing businesses, and at the end of the day, those are the metrics that investors look for. But anyway, this is the first part of the story, okay, revenue growth. Now let's look at a bit more detail to understand how profitable these companies really are. So first I threw in EPS estimates for the next year, and from these 4, we can see that Visa, MasterCard, and PayPal have very strong EPS, but Square, once again, it's kind of a laggard here. In terms of price to sales, though, the story completely flips, and I included some approximation price to sale averages here as well for these companies. And this was based on numbers prior to 2020, which I think was a pretty fair representation of where value generally is found. And Square, interestingly, is the only name that's trading under its, pre-2020 price to sales ratio. Visa and PayPal are quite close to their historical averages, but MasterCard is still quite inflated here based on this metric. Now, I wanted to present price sales to you because I know some of you guys look at that. But in my opinion, these companies, they're very profitable, especially Visa, MasterCard, and PayPal. So comparing them to a price to sales just does not make a lot of sense to me. I think a PE ratio and a forward PE ratio makes a lot more sense for these businesses. Square, that's kind of a different bucket here. They're not as profitable, so price to sales is a decent metric to look at. Again, just my opinion. So what I've done here is added some historical PE averages, and we can see that all 4 are trading below what they usually would trade at, implying to us that there is some value here. And by comparing all of these so far with the data that we have, MasterCard, guys, looks like the best deal here because it's offering us a 34 PE, which may seem high at first, but it is below its historical PE by a decent margin, and it's expected to grow the fastest of the bunch here at nearly 20%. So, at this point, we could stop, we could say, okay, MasterCard looks like the best company to do some more research on, or maybe if you believe price to sales is the best metric for this category, Square is the best company to do some more research on to see if that's something you want to invest in. However, I'm going to present to you a few more facts, and it may completely sway your decision here to a different company, not MasterCard, not Square. In terms of margins, both operating and net, Visa is in a league of its own with MasterCard in second place. Square has absolutely poor metrics here, objectively speaking, and to be honest, it isn't anywhere near comparable to the others. Free cash flow is another huge data point to look at for these companies, and Visa again leads the pack by a massive margin, over $16 billion expected next year, well ahead of its competition, MasterCard, PayPal, and Square. And in fact, if you look at Square, it once again is the worst of the bunch with less than $1 billion in free cash flow. I also included some data on share buybacks, which I thought is relevant here to share, and I'd be surprised if these companies don't exhaust these amounts during this current quarter that we're in because they're all seeing suppressed share prices. And I also will be looking for an announcement for them to increase their share buyback program because I think that they realize that their stocks are just too cheap at current prices. And with that free cash flow that they're generating, it's probably a good spot to put their money in. Again, another thing worth noting here is that Square has no buyback program. Finally, I threw in dividends at the bottom here, and you can see that it's very minimal for Visa and MasterCard, but they do pay out a dividend. So now with this new data, the story completely changes in my opinion. Square, even though it had the best price to sales, appears the weakest company of the bunch here by a pretty good margin. I would argue that it's also probably the most innovative company of the four, but that doesn't necessarily mean that I'll pay any valuation for this, especially when the other proven companies are trading at, discounts, if you will. The story for Square has been, the point of sale system that they sell, their payroll, all of that stuff with their banking system. And then on top of that, you have their Cash App, which has picked up adoption. That's kind of been the story for Square for the last few years, and that's why the stock has literally, made millionaires. But that story seems to be slowing down now. We can see what the growth is expected for next year. And to be honest, single-digit growth for a growth company is just not impressive. Now, maybe the data reported for next year is incorrect. Maybe things will change. Maybe they'll raise guidance, whatever. But as of right now, based on what I've seen, Square does not look appealing to me. So that kind of rules out one of them. So that leaves PayPal, Visa, and MasterCard. PayPal, in my opinion, is another company that's very interesting at the current price. Now, I saw initially that it was down 40%, so I was like, this is probably the best value of the bunch. But after running these numbers and showing you guys the comparison here, PayPal is still quite expensive for what it provides. It's an interesting company. They're doing interesting partnerships. They recently partnered with Amazon. They have their Venmo app, which is massively successful in the US. But again, it's a company that's trading more expensive than its peers with, comparable results, if not slightly worse results compared to Visa and MasterCard. So I think for me to actually consider PayPal as an investment, I'd want to see the prices go much lower than where it's at today. I don't know if that's going to happen. But even after a 40% discount, it does still seem quite expensive. So that now leaves us with the two behemoths, Visa, MasterCard. These two companies are absolutely, extremely well-run companies, extremely profitable companies, high free cash flow companies like you saw. And in this environment, I think will eventually get rewarded from shareholders. I think, while the broader market pulls back and these stocks also pull back, they'll probably see the fastest recovery amongst the bunch because they generate so much cash and they're just such safe investments that investors are going to eventually pile money into this. In fact, today, while, a lot of stocks were down quite significantly, Visa and MasterCard actually saw green days because they've seen selling in the last few weeks and maybe the selling there is exhausted for now. But investors are starting to see some value at these prices for both those companies. And this is kind of where independent thinking and kind of, viewing data and results and stats and metrics kind of gets subjective because you guys saw the same data I just did what I presented on the screen. And you may draw a completely different conclusion. You may say, hey, Square is actually the best of the bunch here. And hey, that's what investing is, right? In my opinion, Visa is where I think I want to put most of my money in. I already have a position in Visa. I'm going to keep building out that position. And while MasterCard is a close number 2, I think the metrics for Visa is just off the charts. And with $16 billion plus in free cash flow, this company can reward shareholders. This company can increase dividends. This company can do whatever it wants with that cash to increase value over time. But anyways, I hope the data that I provided you guys here was insightful. If it was, let me know in the comments down below. We can do similar videos for other industries and other stocks, and I'd be happy to provide my opinion on that as well. But either way, guys, go out there, look for some fintech plays. There's a lot of opportunity. There's a lot of good value out there, in my opinion, right now. And while prices could go lower in the short term, I think these businesses will be absolutely fine over the long term and provide us some pretty good returns. Anyways, guys, hope you enjoyed this video. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.